Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And I want to welcome you here today because we're going to talk about the stock market. That's right. When things are going bad or when things are going good, there's always choices that you can make. So we're going to talk about it today. And oh, by the way, we're going to talk about some dividend stocks where it's set it and forget it. We're going to talk about index funds where it's set it and forget it. We're going to talk about Wealthfront where you set it and forget it. And welcome. Stop struggling now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back. And I want to thank you so much for being here. And once again, you're on the Stop Struggling Now YouTube channel page, and you need to share the videos. This is so you can help one person, 1,000 people, 1,000,000 people. You never know who you may help. So please share the videos. And notice over here on the right hand side, there's a join button. And that's how you become a member of the channel. As a member of the channel, under the community tab, you receive special messages specifically for you. You also receive 1 or 2 videos specifically for you. You also have special emojis and icons next to your name in chats and in the under the regular videos as well. Now, let's get into it, ladies and gentlemen, because here is the first thing that you need to know about the stock market. And I know a lot of you in the SSN Nation already know these numbers because that's what we talk about all the time. Here it is. The top 10% of the wealthiest owns how much of the stock market? 89% of the stock market. That's right. You heard me correct. Think about this. The top 10% of the wealthiest own 89% of the stock market. That means the rest of us only own 11% combined. Now think about it in these terms. If you think there's 350 million Americans in the United States alone, and think about 35 million own more than the 315 million combined. That is outrageous when you do those wealth inequality numbers. Now, what this also tells you is you may need to be in on where the rich people put their money. The stock market. It's not flashy. It's not sexy. Nobody even knows you have them. Can't be seen. This is a place you need to grow your wealth, ladies and gentlemen, over time. It's long term. Now, what if we go one step further? Because you might be curious about 1%. The top 1% of the wealthiest hold 54% of equities and mutual fund shares. Think of 1% out of 350 million. 3.5 million people hold more in the stock market than 54%, more than 175 million people. This ought to tell you there's a problem in Houston if you're not investing in stocks. All right? Now, some of you may be saying, Eric, you know, the stock market is kind of crazy. Well, I'm about to illustrate crazy. Here we go. This is an article recently, February 25th to be exact. Look at this. Investors should sell into any rally in the stock market as 76% of the NASDAQ enters bear market territory. This is courtesy of Bank of America. That's what they're telling their clients. But that's not all, ladies and gentlemen. 51% of the S&P 500 has entered the bear market territory. That means there's a whole bunch of stocks that are down. Well, imagine what's going to happen if war breaks out even further. Imagine what's going to happen when there's inflation that's running rampant. Imagine what's going to happen when the interest rates start increasing. Imagine what's going to happen when even more people don't have a job. If you think it's a bear market territory right now for 76% of the NASDAQ and 51% of that's 3/4 of the stock on the NASDAQ are in bear market territory, and 51% of the S&P 500's in the bear market territory, meaning 20% below their stock values. And we're going to look at some stocks, ladies and gentlemen, and I want you to determine, you're going to need to tell me, do you think it's a good time to invest in some of these? Some of these could be 20% down, 30% down. How about 40% down year over year? How about 50% down year over year? Is now the time to invest, or are you going to wait to find out what's going to happen in Ukraine? Are you going to find out what's going to happen with the interest rate increase? Well, we know pretty much what's going to happen. Conflict has already started. Interest rates are definitely going to be increased according to the Federal Reserve in about 2 to 3 weeks. Now you have to start determining, are you going to take a risk in the stock market? Well, let's go find out. Some people, let's talk about Wealthfront. I rarely talk about this. Some people like that set it and forget it. So go down below. There's Wealthfront. Oh, don't forget your free stocks from Robinhood and Webull if you haven't already gotten them. But Wealthfront allows you to put money in and they manage it for you from $500 on up. So you put in $500 to $5,000 and guess what? They manage it for free. But when your portfolio gets over 5,000, then they take their little fee. Well, 0.075, I believe, is their fee for a little under 1% annually. So there you go. If you want to set it and forget it, there's other ways to set it and forget it by being involved in index funds. And here goes some of the best right here. I put in best index funds. You've seen these on the live streams. QQQ, VOO, SPY. That's because the S&P 500 and NASDAQ have traditionally risen. Even after a bad market, they rise back up. So the index funds, this is why they're the most successful ones. Here's the Vanguard's V2, VTWO for everybody on podcast. The iShares, IVV. So that's those. And then there's some other ones. Wisdom Tree is very, very interesting. DON is their ticker symbol. And FNILX, Zero Large Cap Index from Fidelity. So these are some of the best funds from 2021 and even 2022. So this is something that you may want to, these are set it and forget it. You have to have a brokerage account, whether it's Fidelity, whether it's TD Ameritrade, whether it's Schwab, it doesn't matter. You can buy these index funds and buy and hold. And every week or every month when you get a paycheck, you dollar cost average and you do this over the long term. Some of these also give you dividends. And by the way, stay tuned, ladies and gentlemen. You want dividends, you want to set it and forget it, where you're going to earn 9, 10, 11% or more on your money annually. You can do that, ladies and gentlemen, with the stock market. So we're going to get into that too. So stay tuned. That'll be about another 5 to 10 minutes later because I'm going to leave you in suspense. Because what if I told you that there's dividend stocks that are 15% or more? That's right. I have a couple for you today. So stay tuned with that. All right. Look at here. First one up on the stock list, because I haven't really ran stocks and you guys know I'm going to add all these to the SSN Nation stock portfolio. All right. But I'm not going to show it on the screen because it's the weekend. So one of these days when we go with the portfolio again, these holdings will be added to it. And generally I just do 10 shares when we do this. All right. So look at this. I want you to notice year over year, PayPal is down damn near 60%. Is now a good time to invest? This, in essence, in the last 52 weeks, look right here, $310 is their 52-week high. $94 is their 52-week low. Is now the time when PayPal is hemorrhaging customers. They have bad press. Blood is in the streets. Is now a good time to buy PayPal, the same company that said, hey, we're gonna do something with crypto. All right. I think this is a very interesting opportunity. And mind you, Venmo, which is a subsidiary of PayPal, keep that in mind. Okay. Next up, let me know what you guys think. Would you enter the market right now, buy these, or do you think they're going to even go lower? That's the real question, ladies and gentlemen. Meta. This is Facebook. Look at this. In the last 6 months, okay, I'll go back again. This was year over year, but I'm still going to go with these 52-week highs and lows. 59% for PayPal. Facebook, 44% down in the last 6 months. Their high was 384. Their low is 190. They're at 210 right now. That's their low in the last 52 weeks, near their low. It is now a good time to get in Meta, which is trying to get into the metaverse. Let me know what you think about getting Meta. Now, all these that I am telling you about right now, I personally myself, I feel they're worthy of investment. And some of these I'm actually invested in already. So I'm just letting you know. Is now a good time when there's blood in the streets. And here's Twitter. After they got rid of whatever they were doing, trying to get it like the clubhouse. And they messed that up. But it's okay. But look at this. Last year over year, minus 54%, 52-week high at 80, 52-week low at 31.30. Is now a good time to go at Twitter, or do you think that's a bad idea? You're an investor. Think like a CEO. Think like an investor. Think like it's your hard-earned money, which it is. What are you going to do with it? You're going to invest in these stocks that are down this much? Here we go with Etsy, a platform that sells. Who knew? 39% year over year, their high of 307, they're down past 50% when in reality, because their 52-week low is 109, 52-week high is 307, is now a good time to invest in Etsy, or do you think it's going to go even lower? Netflix, out here giving people $1 million deals, making their own movies, their own short series. They're doing it a whole different way. Look at this. 30% down year over year, but are they 30% down when their 52-week high is $700? 52-week low is $351. Is now a good time to get into Netflix. Now remember, you can buy fractional shares. A lot of people say, hey Eric, I don't have $400. I don't have $500. Well, we all know the numbers. 60% of the population doesn't have $500 in their bank account. 70% of the population in America does not even have $1,000 in their bank account. So that means most people are going to have a little bit of change in it that they can afford to buy stocks. So you could say, hey, I want to put in $100, $50, $20, $10, $300, $500. It doesn't matter when you have fractional shares, which Robinhood and Webull and Fidelity all allow fractional shares, along with E-Trade, and almost a lot of brokerages now allow fractional shares, meaning I can buy whatever denomination I want. I can buy $20, $50, $100, $200, $800, whatever. It doesn't matter, okay? So you can buy no matter what, but is Netflix a good buy? I'm not going to keep going, but I only have a few more. NEO, look at this. Year over year, 57.92%. At one time, it was $55 last year, and then the 52-week low is 18, and now it's sitting at 20. Do you think this is a good idea? NEO, the future, but they're in China. What do you think's going to happen here? All right, let me know down below if you think you should invest in these or not invest in these. Let me know what your outlook is here. We're all investors, right? Let's get different perspectives. Lucid, the premier high-end electric vehicle company. Last year, they're just down 14% year over year, but their stock shows a different number because last year they were up to $57. Now they're down to 26. That is 50%. And the 52-week low is 16, so they are off of that. You guys had an opportunity to buy Lucid when it was around $17, $18 a share. Remember that. Before they merged, you could have had that stock in the teens. We talked about this a year ago, a year and a half ago, so it was possible. All right? Now, let's move with the supplier, because that's electric vehicle companies, the last two. This is a supplier, ChargePoint. They traditionally were installing the Tesla chargers, but of course they can expand to other car manufacturers since they went to ChargePoint. But look at this. They're down 55% nearly, 54%. Last in the 52-week high is $38.50. 52-week low is $11.21. And now we're at $13.71 as of today. What do you think? I believe this is a hell of a deal at this price point. Because some of us bought in at 19, 18, 20. So dollar cost average down for us, me. Other people can enter near the low. But is this really the low? That's the question. Now, let's get into the weed, right? Let's get into marijuana stocks. Because about a year and a half ago, this was the hot deal because 5 states said we're going to allow some form of marijuana planting or sales or dispensaries. So these stocks in the marijuana sector increased dramatically. So you see here, the 52-week high was $1.75. The 52-week low was 40 cents. Does that mean this is a good deal? Down 62% year over year. Now, keep in mind, this was very interesting because I bought when it was around 43 cents. It went to like $1.10 or $1.20. And I was like, that's like 300% on my money. 3 times my investment. I think it's time to sell. So I took the profits. That's very interesting when I say that because, like I said, I no longer, well, I might only hold a few shares, but I'm pretty sure it's down to very few shares. But is this a good investment? It's marijuana, Sundial Growers, SNDL. S is in Sam, N is in Nancy, D is in David, L for everybody on podcast. Now, Planet 13 is with marijuana. They're in Las Vegas. They're one of the biggest cannabis dispensaries in America. And somehow they're down 60%. I am thinking what's going to happen in the next election cycle. There may be another state to 5 more states that are going to allow this because they're going to be looking for tax revenue from the sales. This right here is way down. $7.70 was the 52-week high, and now it's down to $2.75, negative 60% year over year. Planet 13 Holdings is PLNHF. I'm bullish. Everything that we're talking about, I'm very bullish on buying. You guys already know we talked about Facebook, Twitter, Netflix, Neo, Lucid, ChargePoint. All these people should have in their portfolio, even with them going down. So again, is now a good time or are you going to wait even further? Now, let's talk about OLN. We're going to go the other way now. We were talking about losses, but we're going to talk about something that we here in the SSN Nation been talking about for 2 years. We've been talking about ammunition, chlorine, hydroxide. These are items that people need in case there is a war and you don't have enough water, you have tainted water, you're going to need to protect yourself. So that's why OLN has always been on our radar because we knew the day would come since we are really in a third world country. Anyhow, in America, never mind about Ukraine and Russia. The point is there's going to be this have and have nots. And those that have, you're going to have to be prepared because if water gets turned off, if food is not in the grocery stores, you're going to have to figure out how you're going to feed yourself. This company, OLN, is in that vein. That's why they are up 60% year over year. Everybody in the SSN Nation, guess what? We were talking about this 2 years ago. Look at this. When it was $12, $17, $16. And quite frankly, I sold mine because it was around here again when I realized it was 300% or thereabouts that I had in profits. I was like, what am I doing? Why am I holding on to this? Let me sell it. Got to get rid of it. So at the end of last year, I sold, I believe, all of my OLN because I said I'm taking the profits and running. All right, so you can see $64 is their 52-week high. $28 is their 52-week low, and they give you a little bit of dividends as well. So keep that in mind. And we're going to keep going. This is all going to be on positive. And this is going to be Procter Gamble. They are a consumer goods company. This is why they're up year over year 27%. But think of it this way. Their 52-week high is 165. 52-week low is 121. So it's not for the faint at heart if you want to invest in Procter Gamble. But if the economy goes down, this is a company that you should be invested in. Quite frankly, this is something you should hold for a long time. If you have P&G, Procter Gamble is P&G. So I advise you to have it. Now, I will say one thing that's very interesting. I don't hold P&G, which I should myself, but I recommend it as well. But 2.2% dividend. I'm looking for higher dividend yields, even though P&G, if the economy does go bad, I expect them to go even higher than their 52-week high of 165. We're going to find out here shortly in the next month or two what's going to happen. But is this going to be a good time to get in? And next up is Microsoft. You guys know I've talked about this. Year over year, they're up 25%. This is another one of these core companies that have their fingers in so many different things. It's software, like you see over here, software, consumer electronics, personal computers. They're in the cloud. They're in music. They're in so much stuff. It's ridiculous. And they have partnerships. So therefore, I feel they've always been undervalued because they've been around so long. But their 52-week high is $349. Their 52-week low is $224. And they even give a dividend of 0.83% at this price point. Now, here's the other thing that's going to come into play. Aluminum, steel, products, American made, right here. This right here, Nucor, N as in Nancy, UE for everybody on podcasts who can't see this. This here is very interesting. They are at their 52-week high at 130. Their 52-week low was 59. Now, you here in the SSN Nation know last year and the year before that, we were talking about NUE and X steel corporations, aluminum companies. We were telling you that was some sectors to buy into. And look here, doubling your money over 100%. Gino Chimiente would say, wait a minute, I would have already cashed out and take that 30-40% profit, never mind about 100% profit. You're good enough to get 100% on your money, you need to sell. I sold. I have to admit, I had NUE. I sold again. I'll show you a chart because it's been in the last 6 months. So here's the chart. I can't remember the buy point, but buy point was well under 100. It wasn't even this because we were over. What am I doing? I got to go further out so you guys can see. Here we go. It was over around in here, and then we had to dump at the end of December of 2021. So again, 100%, 120, 130, whatever it was. I said, okay, good enough. I'll take the 2 times the money or whatever it was. I felt that was good enough. And once again, taking profits, that's what you're doing. That's what you're investing for. Reload the money, invest into something else. But remember, we can't win them all, but we're trying. All right? Now, let's get into some dividend stocks. And you guys already know my number one dividend stock that I was talking about years ago when it was only $4.80, $4.75. We were at 17% or something like that, dividends off of it. People thought I was crazy. Well, the stock actually increased in price, which is kind of cool if you sell it. But the dividends that we're earning are around 16% because we bought it back when the stock was basically half price damn near. So I'll show you a chart back in here. See this? $3.83, $4.20. It was around 4 something. I just can't really remember. But all I'm trying to show you is 440, and you come out to these at the end of where we at? At the end, somewhere around there. I sold a few shares because I was like, you know what, might as well. But I'm still earning 16% on the money that I invested almost 2 years ago. All right. So you have to think about these things when you have dividends. And even right now, it's at 8.92% on your money at the $8 price. And that's P as in Paul, S as in Sam, E, C as in Charles. Think about it. Let me know what you think. But Prospect Capital, and don't worry, we have some other surprises for you today. I've talked about AM on the live streams and Terrell Midstream. Now remember, this is at 9.37%. I don't know what they've done year over year, but we'll look. It went up to 1171 down to 826. So is 9.37% good to you? That's the dividend that's coming from AM. All right. Now, there's one that I haven't mentioned in a long time, in the last 2 years. But look at this. I went to go back to IVR and look at what we have here, ladies and gentlemen. IVR, that's Invesco Mortgage Capital. They are down 44% year over year, which now means their dividend is valued at 16.44%. Will they cut the dividend? I don't know. But 16% on your money, ladies and gentlemen. That's the first surprise. I'm glad you waited around. Let me know what you think if you think this is a worthwhile investment. Remember, when the stock market goes down, sometimes dividends get cut, like what Ford did in 2020. Ford used to have a nice little 60 cents a year dividend. They cut it to 0. And then they brought out a dividend again, but it's only like pennies, a dollar, 1 cent, 2 cent, whatever it is. But nonetheless, I'm just saying, here's high risk maneuvers. 16% on your money is beautiful, especially in an inflationary environment, but they might cut it if the economy goes bad. And they already have a 44% year over year decrease in their stock price. And then the last one, because I've talked about this on the live stream recently, and many people may not realize, how about this percentage rate? I'm leaving you in suspense right now. Higher than 16.4. That's right, higher than 16.4. ORC, ladies and gentlemen, at $3.39 price point, because they went down another 5% in one day. Look at this. 19.47% dividend return on your investment as long as ORC is going to give out dividends. Now, this is impressive. The 52-week high is $6.22. Guess what the 52-week low is? $3.35. They're at $3.39 right now, and their 52-week low, I believe, was probably intraday, because it ends up at $3.39. Looks like maybe even after hours, $3.37. Yeah, it's down there, ladies and gentlemen. So this might approach, if this goes even worse, this could approach 20% on your money. 19%, as long as they issue dividends, is going to be sweet. I don't know if they came up with anything saying they wouldn't give out dividends, but this is crazy right here. 19% dividends would be awesome. That would keep you near inflation numbers, so you wouldn't in essence lose any money, although there could be like a situation here where you buy the stock at $3.40, the stock drops to $2.40, but your initial investment is still going to be earning 19.47% on the money. But if you ever decided to sell your shares of stock, or they cut the dividends entirely, then you're not going to be able to do anything, right? So that's what you have to think about. I'm going to end this, ladies and gentlemen, because I know it's been pretty long, but we got to get back into the stocks. We got to get back into the financials, because this is going to be another opportunity of your lifetime. I don't know how many times opportunity of your lifetime is going to come up. 2020, the pandemic, an accident. Ukraine, Russia, another situation that nobody figured was going to happen. Now you're going to have the interest rate increase and inflation. Nobody knows what's going to happen with inflation. So all this uncertainty, you're going to have plenty of opportunity to join the top 10 percenters on acquiring some stocks with your extra money. Do your due diligence, do your own research, make sure you check things out and feel comfortable. And the next video, please stay tuned. Probably be on the crypto, because that has crashed entirely. We got to talk about that as well. And with all that said, Thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. And that's why we have to attack our financials all the time. You have to prepare. You just can't sit there and say, you know what, I'm just going to let it slide for 5 years. I'm just going to invest in one thing for 20 years. No, there's things that give you an upside that you can invest in now, and then that can go up 300, 400, 500%. Why not take advantage of that? And that it doesn't move 300, 400, 500% in 20 years, but maybe you'll get some good advice, and maybe you'll sit there and say, you know what, that was cool. I made 200% in a year. I made 300% in 3.5, 4 years. That is awesome. That's how you build wealth, ladies and gentlemen, and that's what we need. That's what you need, ordinary citizens. You guys know the numbers. Americans generally just make like $44,000, $45,000 a year. That's it on average. And rents are going up to $2,000 a month in most places for a studio or one-bedroom apartment. It doesn't even have nothing to do with California and New York. You can find it in Florida. You can find it in Georgia. You can find it in Tennessee. It doesn't matter. It's happening right before your very eyes. So you're going to have to figure out where you're going to get your wealth from. How are you going to make up wealth out of thin air? Well, stock markets. That's why the top 10 percenters are in the stock market. 89% of the stocks are held by the top 10%. You think this is by accident? No. Join them, ladies and gentlemen. Join us here in the SSN Nation. And with all that said, keep your head up, keep moving, and I'm out.